Now, if you take a look, you can see that there was also another bull flag setup a bit earlier on, which was here. Okay, let me get rid of this. Again, you can see that the 18 has been tested, and there you go. That's your mini bull flag, right? So that's your impulsive candles, right? Making higher highs, higher highs, higher highs. Again, like I said, impulsive candles don't have to be green, although I prefer them to be green. But as long as you've got this higher high pattern, and then we have got this lower low pattern over there. There we go. And it retraces to the 18, right? And you could actually place a buy order right above the high of that candle over here. The stop loss below there somewhere. And the next candle exceeds the high, triggers the buy order, and that would have been a winning trade as well. So this was also a potential bull flag setup. And again, you can see over here, this is another bull flag setting up, right? So this is your impulsive candles. Again, 1, 2, 3. Okay, this is candle 1, candle 2, candle 3, all making higher highs. And you can see the last candle is a red candle, and that's fine because it makes a higher high. And then it pulls back to a this corrective candle, making a lower high. So this only had one corrective candle, 3 impulsive candles, one corrective candle that again served the 18 moving average. So again, a buy order could have been put right above the high of this candle, right, and stop loss below there, ensuring it's at least 8 pips. And the next candle goes up, exceeds the high, triggers the buy order, and that would have been another trade. So you can see that there were a couple of entry points within this, and sometimes within that trend you could get in and get out and get in and get out multiple times. Okay, all right, so pound yen, this was on 6th of June. Again, you can see this was surfing the 18, surfing, all right, surfing. So surfing multiple times, and again, the more times it surfs, the more confident you are that that moving average is a strong support. And here we have got the impulsive candles. Let me name them. It's basically candle 1, candle 2, and candle 3. These are your 3 impulsive candles, making a high, a higher high, and a higher high. So these are the impulsive candles going up. Then you have got, again, only one corrective candle in this case, right? This is the only corrective candle, the red candle over here, making a lower high, and again, finding that support at that moving average, surfing the 18 EMA. Okay, so once you've got that corrective candle coming to the moving average, again, you place your buy order right above the high of the candle, plus the spread, whatever the spread is, right? So buy order is over here at 14760. Stop loss is right below the low of the candle. In this case, it's 14739. 60 minus 39 is 21 pips, which is way above 8 pips, so that's fine. So we're risking 21 pips. In this case, we have got 1 R is 21 pips. If you go for 1.5 R, there'll be 31.5 pips. So 14760 plus 31, you can put a half if you want, is 14792. So that's your profit target. Okay, and again, it went up, came down, boom, and hit the profit target over here. Okay, and is this a bull flag setup? Yes. Well, yes, in a way. Okay, so these are your impulsive candles going up. Okay, so there's a high, higher high, higher high. These are your impulsive candles, and then you've got your corrective candles. All right. Although this one, no, not really. On second thoughts, yeah. Now I know why I did not use that, because again, this makes a lower high, right? A lower high. Okay. Now, would I start to get in at this point? This is a bit risky because again, you're entering a bit far from the moving average, right? You want it to pull back nearer the moving average. And you can see this next candle over here has already made a higher high. So it's no longer a bull flag. Remember, the flag has got to make lower highs, lower highs, lower highs, reaches the support level, and then you enter a new high. So in this case, it pulled back to support over here. Now it looks very nice in retrospect, but you can see it made a higher high, it made a higher high. So that kind of like it violates that rule that you should make lower highs. You want to see a very nice flag making lower highs. The first higher high is the one that you get in to ride the next impulsive candle wave up. And again, always remember that you want your ADX indicator to be above 25, indicating a strong uptrend. Always check your hourly candles as well to make sure the hourly candles are on an uptrend as well. Another example, pound Aussie. So on this one, you can see it's surfing off the 18 moving average. And then it makes a really strong impulsive move up. So in this case, you've got 1, 2, 3, 4, 5 impulsive candles. Okay, so all making higher highs. That's the highest point, and then starts to make lower highs. So that's your first corrective candle, 1, second corrective candle, 2, and then you put a buy order right above the high of that. Stop loss over here. Next candle triggers your buy order, and you're in the trade. In this case, your stop loss is 8 pips, profit target 16 pips, 1 to 2. Okay, and again, ADX above 25. Check your hourly candles, ensure that they're also on a clear uptrend. Okay, so I see a potential bull flag surfing on the 18 moving average. So I'm going to trade, put a potential trade over here at, put a buy order right above here at 9961. Okay. And a stop loss right below the low of this candle, and it must be at least 8 pips. So 9961 minus 8 is 9953. So my stop loss will be here 9953. Okay, there we go. You can see the spread is about 5 fractional pips. So I'll just put it maybe 9961 and a half. Yeah, 9961 and a half. And this could be 9953 and a half. Thereabouts. Okay, so placing my order. Use a buy stop at 0.9961 and a half. Stop loss at 0.9953 and a half. Is that correct? Yeah, that's right. Okay. So placing my order. Now I've not put my profit target yet. I will in a short while. But let me just explain. So what I'm seeing here is, okay, I'm seeing it surfing the 18, right? It's surfing the 18 over here. Okay, so this is my impulsive candles, right? You can see this is a high, it's a high, it's a high. So this is my impulsive candles going up. So it's making higher highs. And then I've got one corrective candle. This is my corrective candle that is surfing on the 18. All right. So I just place my buy order right above the high of that candle plus the spread. So that's at 9961. You can put half a pip as well. And then my stop loss would be below the low, but at least 8 pips away. So that will be 9953 and a half. Okay. So that's my entry price, the green line. My stop loss is the red line. And I will then put my profit target. So again, I can aim for 1.5R or 2R. So in this case, I'll probably aim for, well, yeah, I forgot. Let's check the hourly candles first. Yeah. And you can see at the hourly candles is also on an uptrend, right? 6 above 18, 18 above 50, above 200. So you have to check the hourly candles as well. And it looks like it could potentially go up to maybe somewhere over here. Right, that could be my target. So I'm probably going to target about 1.5 hour. Okay, so that will be about 8 or 1.6 hour. I could target 1.6 hour. That's fine. 8 times 1.6. So that's about 13 pips. So I'm going to click on this. And my profit target will be 13 pips above my entry price. 9961 plus 13, 9974. 9974 and a half. Okay, there we go. Okay, so we're all set. So my entry price, my profit target, my stop loss. So it's not been triggered yet. And again, notice that my ADX is above 25. So it's a strong trend. So let's see if it triggers the trade. Okay. Okay, so following on the trade, you can see what has happened. All right, this candle has now gone above the high of this candle, so it's triggered my buy order. You can see I've bought at 9962. My stop loss is there, and this is the running profit right now. Right, so it's still going up, and I have to wait for it to hit my profit target, which is over here. All right, so we're just going to leave the trade and see if we can hit the profit target in the next couple of minutes. Right, so you can see the running profits over there. And like I said, when I enter a trade, I don't look at it anymore. I'll close it and wait for it to resolve itself. So you see the trade is moving towards the profit target, and this is the running profit, as you can see. All right, so as you can see, I've kept my profit target in about 30 minutes, less than that, about 20 minutes. All right, apologies for the noise here. I'm in a restaurant right now, so I'm having my lunch. So just saw that it hit my profit target. I'm out of the trade, and as you can see my account history over here. Right, so I entered at 9962. There's a stop loss, and hit the profit target. So that was a profit. You can see before that there was a losing trade. So like I said, in trading you will have winning trades, you have losing trades, but as long as your average win is more than your average loss, you can see this is a series of winning trades, and this was just some cancelled trades. So overall, right, that's how you get profitable, right? So when you win more than you lose, right? So this concludes an example of the bull flag surfing strategy, trying to shout above the noise in this restaurant. So hope you understand that. Thank you. Okay, so this is an example of a trade which I just entered a couple of minutes ago. This on Dollar CAD, and again, this is a 50-minute candles, and this is a bull flag surfing setup. So you can see it's surfing the 18 moving average, right? Surf, 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 and it went down. And again, these are the impulsive candles, right? So making higher highs, so on and so forth. So these are the impulsive candles, and then you've got the corrective candles, right? It makes lower high, lower high, lower high, and then it finds the support at that 18 moving average. So I place my buy order right above the high of this candle at 3292. My stop loss is below the low of this candle, but I decided to put it a bit lower so that the stop loss is below the 50 moving average to give myself a bit more support. So my stop loss is at 3282. So you can see that my risk in this case is 10 pips, right? And my profit target is about 15 pips. Okay, so my profit target will be 15 pips plus 3292. That's 3307. So this is my profit target over here, my entry price over there, my stop loss over here. And again, you can see this is a running profit that's over here. So we see if this can again be another winning trade for the day. So again, like I said, once I enter a trade, I'll leave it and let it do its thing. Now, point to note, you may note that the ADX is below 25 actually. So I have mentioned before that the ADX, I just use it as a guide, right? That usually above 25 means that it's a clear, strong uptrend. But there are times when even if it's below 25, but I can clearly see that the trend is strong, like that, right? I would still take the trade. So the ADX is not a must to me. It's a nice to have, but it is not a must. I will still take it if I see a very nice pattern on that, right? And again, always check your hourly candles. And you can see on the hourly candles, it's also making a very nice uptrend. And on the hourly candles, you can also see that it's finding support at the 18, right? It's surfing the 18 moving average. So that gives me extra confidence that both on the 15-minute candles and the hourly candles, it is very, very strong, right? You can see the running profits over there. Okay, so checking up on our dollar CAD trade, as you can see, it's getting close to the profit target. Hopefully can reach the profit target. And that's the running profit over there. And we will see if this is another winning trade. And if it is, that's fine. If it's a stop loss and it goes down and hits a stop loss, that's also fine. So remember, the most important thing is the psychology that when you have a winning trade, don't be happy. When you have a losing trade, don't be upset. Because every trade is random. You can't control the outcome. All you can do is to control placing trades with the strategy. And that's all you can do. And you know that if you do that consistently, you are going to have more wins than losses. Average win more than average loss. You will make money consistently. All right. So, and that's why I don't care if it reaches the profit target or if it hits stop. I don't really care, because to me it's a good trade because it follows the rules, and that's a psychology to have in trading. All right. So let's take a look at the short setup right now. So, what does a bull flag look like on a downtrend? Well, this is what it looks like. So again, it's made up of your impulsive candles and your corrective candles. So in the case of going short on a downtrend, the impulsive candles are the candles going down. Okay, so your impulsive candles, again, are the candles in the direction of the trend. And in this case, going short, they are candles making a series of lower lows. Okay, so you can see here, there's a low, and that's a low. So it's making a series of lower lows. There we go. So these are your corrective candles. Sorry, these are your impulsive candles, right? Impulsive candles. And after your impulsive candles, you have got your corrective candles, which go in the opposite direction of the trend. So now the trend is going down, the corrective candles are going up. And they are making a series of higher lows. Okay, so it's higher lows, and higher lows. Okay, and again, you're looking to get in once the new impulsive wave begins. So again, it's impulsive wave, corrective wave, get in right as the new impulsive wave begins. And again, how do you know the new impulsive wave begins? When a new low is reached. So it makes higher lows, higher lows, higher lows. The moment one of the higher lows is breached with a lower low, in this case, it makes a new low, it tells you that, hey, the price is going back down again. Okay? So again, this is the context of a downtrend. So you must see the moving averages in sequence. So 6 EMA below 18 EMA, 18 is below the 50, 50 below the 200. Okay? And again, it must be surfing either the 6 or 18 EMA as a resistance level. Again, after the impulsive candles, the corrective candles should not break above that resistance. It should not break that surf wave, if you will. Okay? And again, ideally, when it corrects, right, you want it to correct to ideally about 62% of the impulsive wave, like I mentioned. If it corrects all the way back to 100%, then it's no longer valid. So let's take a look at this on the chart. Okay, so here we go. So first of all, you can see a clear downtrend, right? Your moving averages are in sequence. That's your 6 moving average. This red line over there is below the 18, and 18 is below the 50. Okay, and you have got the 6 being served, right? So you can see it's being served, touch and go, right? You want to see this surfing action, right? Surfing action, right? So it's surfing the 6. So we want to see the corrective candles going back to the 6, finding resistance, and then we do a sell. It's a short. So in this case, you can see the impulsive candles are here. All right. So that's candle 1, candle 2, and candle 3. So these are the 3 impulsive candles, making a low, a lower low, and a lower low. All right. So that's your flagpole. And then you've got your corrective candles, making higher low, higher low. And again, it corrects to the surf EMA, which in this case is surfing the 6. So once it corrects to there, we say, okay, we can place our sell order right below the low of this candle. Okay, so the sell order is over there, and the stop loss is right above the high of the candle. Okay, and what happens? The next candle, it does not make a lower low, right? It makes another higher low. So once you see that, it's still correcting up, and it's still okay because it's still below your moving average. It's still below the surf wave. Okay, so once that happens, you cancel your order and you place a new order, right? So now your new order is below the low of this candle. So that's your sell stop order below the low of this candle, and your stop loss would be above the highest point of the correction, which is there. Okay, so that's your entry, that's your sell entry. Again, it's a sell stop order, which means it'll only be triggered if the price goes to that price or lower. All right, so your stop loss is somewhere over here. Stop loss, sell entry, and again, that's your 1R, your risk, which should be at least 8 pips. Okay, now what happens? The next candle, okay, opens here and then goes down, triggers my sell order, makes a new low. So I get in right here at this candle, okay, and I take the trade all the way down and hits my profit target somewhere down there. Okay. All right, so to put it into words, let's take a look at the entry and exit rules for bull flag short surfing. Okay, so here are the setup rules. Number 1, the forex pair must be on a downtrend. Again, moving averages in sequence. Check the hourly candles. M15, if I'm trading M15, I check hourly candles. If you happen to be trading the hourly candles, you look for the 4-hour candles. If you're trading the 4-hour candles, look for the daily candles. So always look at one time frame higher from the time frame that you are trading in. Okay, so the hourly candles on a clear downtrend as well. You can look at the ADX. So again, ensure the ADX is above 25, indicating a strong trend. Okay. Next, you want to see a strong resistance from the 6 or the 18 EMA. You want to see it touch and go, touch and go. You want to see some kind of resistance that is being served. Okay. Now, once it's being served, you're looking for a bull flag formation. Right. So in this case, the bull flag would be your impulsive candles making lower lows, right? And your impulsive candles making lower lows. So this impulsive candle 1, 2, and 3. So there's a low, lower low, lower low. There we go. So impulsive candles, and followed by the corrective candles making higher lows. So it's higher lows, higher lows, higher lows, and once the new low is broken, boom, you're in the trade. So you sell there, and then you take a trade all the way down. Okay. So once you see that pattern, you place your sell stop order. I usually use a sell stop order. Place it just below the low of the last corrective candle, right? Just below the low plus the spread, and your stop loss above the high of the corrective candle that is near the moving average resistance, either the 6 or the 18 EMA. And again, you keep repeating this process until your sell order is triggered. If it's not triggered, cancel the order, place another order until it's triggered or until it's no longer valid. So again, if the corrective candles go above the start of the impulsive wave or above the resistance, the setup is no longer valid and we cancel all orders. We look for another bull flag surfing somewhere else. Okay? So again, the same example over here. We have got our corrective candles, 1, 2, and 3. Right? So again, low, making lower low, lower low. And then we have got our, so again, sorry, these are impulsive candles. Impulsive wave down. Corrective wave up. So higher low, higher low. So again, once you see this candle, you could actually place your sell order right below the low of this candle because it is touching our 6 moving average. But it did not get triggered, as I mentioned before. So when it doesn't get triggered, what you do, you repeat the process. You cancel the order, and if the next candle makes a higher low, then you put a stop loss, or rather you put a sell stop order over here at 3361 in this case. And your stop loss would be above the high of the highest corrective candle, 3379. So in this case, if you take 3379 minus 3361, that's 18 pips. Okay, and if you aim for 2R, that's 36 pips. So you take 3361 minus 36, profit target would be at 3325. So the next candle that appears opens over here, that's the opening price, goes down, triggers the sell order at 3361, and 1, 2, 3, 4, 5, 6, 7, 8. 8 candles later, it hits our profit target. So that's about 2 hours. Okay. Again, ensure that the 1R is at least 8 pips. Okay. In this case, it's 18 pips. More than 8 pips is fine. And profit target is placed 1.5 to 2 hours below the entry price. Okay. So alternative entry method is, instead of using a sell stop order to catch it as it goes down, we could use a sell limit order. Okay, and again, when do we use a sell limit order? We use a sell limit order when we want to sell higher than the current price. And we do this if the price has already moved below our intended entry price. In other words, the bus has already moved in a direction and we kind of like missed the bus because we were doing something else. By the time we saw it, it's gone. Never chase it. Always place a sell limit order. Hopefully the bus will come back to get us and then continue the journey down. Right, so in this case, again, let's imagine that, again, let me orientate you. So that's 1, 2, 3. These are your impulsive candles down. These are your corrective candles up. And again, when we see this candle, the moment this candle closes, we should already place our sell order over here to catch it as it comes down. But let's imagine you were busy. By the time you saw it, this candle had already formed. So the price is right now over here. Maybe it's about 335. Example, this could have been 1.3352, for example. Okay, so the price is already here. It's kind of like the bus has already left the station, right? So don't chase it. Don't say, okay, I'm going to get in here. No, in this case, you were supposed to get in at 3361, but now it's already 3352. It's really moved lower than where you wanted to get in. So be patient. Place a sell limit order at 3361. And again, a sell limit order means you will only get the order filled if it comes back to 3361. Okay, if it doesn't, then well, fine. Miss the trade, go look for another trade. Never be afraid of missing a trade. Okay, never chase a trade. That's the psychology. So in this case, we place a sell limit order at 3361, and you can see the price goes sideways, and then it goes up, boom, hits our sell order, right? So the bus comes back, fetches us, and then boom, goes all the way down. There you go. All right. So that's when you use a sell limit order if you have already missed the entry. Let's look at a few examples. This is Dollar CAD on the 10th of May. Again, I'm looking at the 50-minute candles. Always check your ADX above 25, indicating a strong trend. Check the hourly candles as well, making sure the hourly candles are also on a downtrend sequence. So you want to see it surfing first. Okay, so you can see it surfing the 6 EMA. It's surfing. All right, so you want to see it surfing, all right, and then looking for a bull flag. So where's your bull flag? Over here, right? So this candle 1, candle 2, and candle 3. This is your impulsive wave down, right? Making low, lower low, lower low, all right? And then you see your corrective candles. It's a low, it's a higher low. So in this case, there's only one corrective candle. And once you had one corrective candle, it already hit your 6 moving average. So you could have placed a sell order right below the low of this candle. Okay, you see this candle over there? Once it closes, you put a sell order right below the low over here and a stop loss above that. Okay, but what happened? The next candle appeared, it did not trigger the sell order because it made another higher low, right? Slightly higher low. So in this case now, you would cancel this original order. And now your new sell order is below the low of this candle, right? This candle, place a sell order right below the low by the spread. And the stop loss will be right above that candle. And if you measure the distance, it's 10 pips. So that's more than 8 pips, so that's fine, all right? Must be more than 8 pips. And that's 1 R. So if I'm going for 2 R, I'm going for 20 pip profit target. So what happens is the next candle opens over here, goes down, triggers the sell order. The sell stop order at 2766. My stop loss is 2776. Triggers the order, comes down, goes up, and then whoa, look at that candle, my God, right? Hits my profit target 2746, goes all the way down, right? And then it comes back up again. So moving on to the next example, this is on New Zealand dollar on the 1st of May. Again, I'm looking at the 50-minute candles. I have to see a clear downtrend. I want to see the ADX above 25. And I want to see it surfing off one of the moving averages. So again, you can see it's surfing off the 6, off the 6. All right, so I want to see it surfing. So I know it's a pretty strong resistance at this point of time. Okay, so I'm looking for a bull flag. So I see a bull flag pattern over here. Again, I'm seeing a series of, so these are my impulsive candles down. Okay, so again, it makes a low, lower low, lower low, lower low, lower low. Right, so after my impulsive candles down, I've got my corrective candles going up. There we go. Okay, so over here you can see after this I've got my first corrective candle. That's 1. So it makes a higher low. Okay, and once I've got this corrective candle, you can see that it is already at the 6 EMA. All right, so in this case there's only one corrective candle, which is that. So we've got 1, 2, 3, 4, 5 impulsive candles, one corrective candle going up. That's fine. So once I've got that, I place my sell order, my sell stop order right below the low of this candle over here. There we go. Okay, and my stop loss would be above the high of this candle and at least 8 pips. So if I put it above the high, just above the high, it's about 6 pips. So I got to have at least 8 pips. I raise it up to 7022, and that gives me an 8 pip 1 hour risk. Okay, so my sell order is ready at 7014, stop loss at 7022. So the next candle, you can see that this is the next candle over here. It goes and hits my sell order, right? Hits it. So it triggers my order. I'm in the trade. It goes up slightly and then goes down and goes up and goes down and hits my profit target. So in this case, I am risking 1R to make 16, or rather 1R to make 2R. So my 16 pips is my profit target. So 7014 minus 16, it's 6998. So I take my profit somewhere over there. All right, so there you go. There's an example of a short setup surfing the bull flag. So let me summarize risk and trade management. Like in all the ways I trade, it's a fire and forget system, which means once I place the order, the moment it is filled, it is triggered, I don't look at it anymore, and I allow it to either hit my profit target or my stop loss. I do not intervene anytime in between, right? So one of the reasons why I don't like to look at the trade when it's running is because, number one, you get emotional. When it goes up to your profit target, you get happy, goes down, you get sad, and it's emotionally very draining. That's number one. Number two, as you keep looking at it, you will always have this urge, this temptation to intervene. And the moment you intervene by shifting your stop loss or exiting early or things like that, it will mess up the statistics of your strategy. So I found over the years the best thing to do is once you place the order, it is triggered, don't look at it anymore. Treat it as a coin toss. Treat it as a random outcome. You've got no idea it's going to be a win or loss. But you know that over many trades, you have more wins than losses. And your average win is more than your average loss. And that's going to make you profitable. But don't always think that this trade has to win, because you never know which trade is going to be a winner, which trade is going to be a loser. All right, so detach yourself from the outcome of any single trade and think statistically. That's the most important thing. Remember that psychology, managing your emotions, is 60 to 70% of your success. The entry strategy, the exit strategy, that's a smaller part of it. I find that I can teach these techniques to many people, the exact thing I do, but they get different results from me because they don't have my psychology, they don't have my emotions yet. But it's something that through a lot of practice and experience, you develop this skill, right? So I always encourage you to start trading with very small amounts or even paper trade till you can get a hang of it, and then you put in real money, right? So you can set a profit target of 1.5R to 2R, wait for the price to either hit the profit target or the stop loss, okay? So like I said, I don't intervene. Now there are only two times I would exit the trade prematurely, okay? Number one is I would exit the trade before any kind of major red news announcement that's affecting my currency pair. So again, every morning, go to Forex Factory. It tells you the events coming up. Look at the red color events. These are the events that can potentially move the currency violently, right? So for example, if I'm trading the Euro US dollar, then I would look at is there any Euro news or US dollar news that's red in color, okay? And I'll always want to exit my trade before the news is released. Whether or not it has hit my profit target or my stop loss, I always want to exit before the news is released. That's the only one time I intervene. The other time I would intervene would be, I would also exit my trade at midnight GMT plus 2, all right? Now, I'm living in Singapore, so GMT plus 2, it's about 5 a.m. Singapore time, okay? And if you're living in the US, that is equivalent to Eastern Standard Time in New York, which is 5 p.m. Now, this is with what's called Daylight Savings Time, which starts from the second Sunday of March to the first Sunday of November. So from March to November, it's 5 p.m. that I avoid being in the markets, okay? And then from after the first Sunday of November to next March, there's no daylight savings time. So it becomes not 5 p.m., it becomes 6 p.m. Eastern Standard Time. So you can double check with your local time to find out what's the equivalent. So for me, I know it's Singapore 5 a.m. Now, what is the reason? The reason is because at this specific time, at 5 a.m. Singapore time, the broker would tend to close a trading day and open the next trading day. And when that happens, the spreads, the bid-ask spread can widen substantially. And this could cause it to hit your stop loss and cause you to lose more than 1 hour because of the widening spread. Now, how, you may say, okay, Adam, at 5 a.m., how long does this process take? It's about 1 minute, right? So the point is, during that 1 minute, the spread could widen and it could hit your stop loss, even though the chart may not show it hitting a stop loss, but the spread widens and it hits your stop loss. So because of that, I never hold a position at 5 a.m. Singapore time or 5 p.m. Eastern Standard Time. Now, most of the time at 5 a.m. I'm sleeping, okay? I'm not awake. So usually what happens is I always make sure that before I sleep at night, which is Singapore time, before I sleep, I would exit all my positions, right? Because in case at 5 a.m. I'm sleeping and the spreads widen and it screws up my trade, right? So that's me. But of course, if you're living in Europe, for example, or you're living in the US, it's during your waking hours. So just remember, if you've got a trade going on at 5 p.m., get out, right? And right after that, you can get back in again, but don't hold it through 5 p.m., right? So that's something really important, right? So that's risk and trade management. Now, a question that people ask me would be, okay, Adam, do you have a trade alert that will alert me to these potential bull flags and surfing? I wish I had, but I don't have one. And the reason is very simple. It's very difficult to program the computer to recognize surfing or to recognize bull flags. It's really hard. Unless some computer genius who can do it, let me know, I'll hire the guy, right? I can't, right? It's very hard to program. It's something that only the human eye can see. And that's good. Let me tell you why that's good. Because of this, many of the algorithmic trading systems, or we call it those high frequency traders, they can't trade this strategy. And because they can't trade the strategy, it makes it more profitable for retail traders. So I like to trade a technique where the computers can't trade, where the algorithmic high frequency traders, they can't trade it because their computers can't recognize it. Only the human eye can recognize the surfing and the bull flag. So that's a good thing. The bad thing is that there's no automatic alert I can send to you because I don't have one. All right. So you may say, Adam, so what do you do? All right. So basically what I do is I look at the market, constantly. All right. Every now and then I look at the market. And of course, if you're having a full-time job during your working hours, don't look at the market. It's only after work, before work. Take a look. And like I said, it appears pretty frequently. And when you see a good setup, you can take it. One of the things that you may also want to do is, if you take our advanced Forex course, okay, you'll be able to join in my inner circle of traders where we trade together every single day. We're in a Telegram chat group and we alert each other every day and say, hey, you know what, there's a bull flag on dollar franc, there's a bull flag on euro dollar, there's an impulse pullback on this and da. And also in the advanced course, you'll be learning advanced strategies like scalping the markets within a few seconds and my trend continuation entry technique, which is another very powerful system. So here's an example of screenshot. We've got about 243 members right now in my inner circle. And again, every day we're looking for trades, we're alerting each other and we're helping each other to filter good trades. So example, this guy, Alex, was it Alex? Yeah, Alex. I can't remember where Alex is from, right? But my traders are from all around the world, from Reunion Island to Greece to Spain to the US, all around the world, the UK, Brazil, Argentina, right? So what we do is we post, hey, there's a Dollar CAD bull flag that just appeared, right? And then, we'll take the trade, we hit the TP. TP means take profit, which means the winning trade. We say, hey, thanks, Alex, for letting us know, and we encourage each other, we help each other, and when you trade with a community every day, it's really easy to trade because you're helping each other look for trades, you're encouraging each other, and you're making money together, right? So if you join the advanced course, be part of this inner circle of traders, and if you join the advanced course, within, I think, 30 days of the basic course, you get a 50% discount. So it's a great deal, right? So go get it, right? Okay, so this concludes lesson 7, the bull flag surfing strategy. Hope you enjoyed it. This is Adam Khoo. And I'll see you soon. If you've got any questions, send me an email be really happy to help you.